Solar works. At the intersection of right-sized equipment, energy-efficient buildings, transparency, consumer education and protection, the correct financing and funding mechanism, we have a sustainable and cost-effective solar model.
Your trusted source for information on the energy transition. This is the Insider's Guide to Energy podcast.
You mentioned that there's a difference between the kind of contracts that someone has from home solar or perhaps a loan and the advantage they get. So in your opening, you talked about how I get a fixed interest rate, so I take advantage as long as the power rates continue to go up, which as of this week, I think California just approved a 13% increase in power ratepayer rates. They continue to do that. That's advantage for the customer. Is that how these things are performed out typically?
Well, yeah, and so when that installer comes and talks about the contract and talks about the financing tool, and you kind of put the model together as to how that thing is going to, cash flow for the consumer, you have to take into consideration what those rate increases look like. And you also have to take into consideration what regulatory policy is in place at the time and what the future looks like. There is the opportunity to grandfather when you get a system, what those utility rates are in terms of an interconnection agreement and so forth. But most definitely, you do take into account escalators that are inevitable.
Now, the one thing that I find a bit challenging is as a homeowner and as someone in the energy industry, I thought it'd be fun just to call some of these solar companies up and just see what kind of response I gave. I gave them my address, told them my power bill,
Right.
and boy, I could buy a timeshare in Las Vegas for about the same level of effort as dealing with the sales teams on these guys here. How does the average homeowner supposed to know what to do? Because I don't want to go learn all the policy if I'm a homeowner. All I want is cheap electricity.
Yeah, I do talk quite a bit about consumer advocacy and education, and there really has to be a balance because I do think that the consumer has to take it upon themselves to understand the tax credit structure, right? So if somebody comes in and says you have the potential for a 30% tax credit, the cash outlay is this, your credit is that, your net is the balance, that has to be something that the consumer goes to their tax advisor or they're educated enough on tax to understand, am I going to qualify for that credit? Am I going to be able to actually pay down that principal when I get that tax credit, and play that all together? So yeah, should the installer and or person that you're working with that's trying to sell you the equipment, sell you the financing and so forth, educate to the best of their ability? Yeah, absolutely. I want consumer transparency. I want that transparency in this market. And anytime you have transparency and people understand what their APR is, they understand those other variables that exist out there, the better off the end game is going to be, especially from our position as a third party loan servicer. We don't want products on our books and manage those assets where there's going to be a greater potential for delinquency or default because they just don't know and understand those things. And, from the contractor perspective, who's typically the person that's going to interact with you to try to sell you this equipment and or the financing model with it, if they don't completely educate you, they should at least point you in the right direction to where you can get that information.
Tom, the way you're talking about this, it sounds like any other major financial purchase. So a home solar system might be $20,000 or $30,000 if you throw in batteries, maybe more if there's a home energy retrofit that's included. That's basically on the order of a car, a new car. And what you're describing sounds like the way anybody would go about shopping for a car. You need to understand the equipment that you're buying. You need to understand how long it's going to last. And yeah, if you go into a dealership, there's generally an understanding you can get a loan or a lease. And there's different financing options. And if you go into a dealer, you might get people who are aggressively trying to upsell you into a more expensive model. or something that maybe you can't afford. So do you think that comparison is apt? Is there something different about solar as a financed purchase when compared to a car or some other major home renovation?
Yeah, I think that's a great analogy, but the difference being is that it's new to them. I think that the majority of folks have been buying cars and or understand financing on those vehicles for a longer period of time. But at the end of the day, it is a similar purchase. Um, a few difference is, you can't amortize your car loan for 25 years, but that goes to the understanding of what's the life of that equipment, what's the degradation of that equipment during the life of that equipment, and how does that affect and play into the whole thing. There's probably a few more nuances to solar for folks to understand compared to an auto. But to your point, Jeff, you can get a car lease. You can get dealer financing. You can get dealer financing and consider, is the dealer financing from Ford and GMAC better than the rebate? Somebody, yourself included, need to put the pencil to the paper and do the math on that and figure that scenario out.
Moving into the public discourse right now, I don't want to name specific names, but there's a lot of noise out there about residential solar in particular, that the companies who are providing these loans or providing the turnkey solar development are not doing well themselves, or that there's a risk that the loans are not doing well and that this is some sort of indication of a decline in the residential solar industry. Is there any truth to that? Where are these ideas coming from? And can you introduce maybe some sanity and some on the ground perspective as to what's really going on these finance systems?
Yeah, I think what's most important to understand is that the interest rate increases that we saw throughout the course of 2023 kind of exposed a few things, right? And had the interest rate stayed low, I think the consumer would have had, a little bit more of a purchase power, and there would have been, a lot more systems installed, which kind of led to, and unfortunately, for some of the companies that have sun in front of it today, their balance sheet at the end of the year wasn't very good, and their shares are decreasing. And what it really kind of boils down to was a slow in the growth of the market because of the interest rates, and then that turned into excessive capital and or inventory sitting in house. And you report that at the end of the year, the stocks drop, it kind of snowballs, and then it gives folks an opportunity to go, aha, what's wrong with that market? How did this thing unravel? I really don't think it's much more complicated than the hike in the interest rates. But at the end of the day, doesn't every reset in any kind of a market kind of create an opportunity for it to be better, the outcome to be better at the end of the day? I can share with you personally that our clients, the folks that we're working with that are onboarding their own captive finance program, their specialty finance program, their PPA lease program, they're very concerned about bad actors. They're very concerned about vetting the contractors. Every single one of them has said, without fail, we want great actors, especially in the third party owned segment, right? The third party owned, that equipment you own. And so when you're installing that, you own that asset, you're borrowing the roof, if you will. You most certainly want that thing to perform and perform at the level that, is expected to satisfy all of the capital stack, including the tax equity partners. But nonetheless, I think every market, you talked about auto, we've seen predatory type of sales in auto for an extended period of time, right? So it's not new that a market that has opportunity and that has a high growth rate has a lot of people that are interested in making money and selling. So I think from that perspective, You know, again, it really just kind of comes down to that interest rate. It exposed some things, and by exposing those things, you create an opportunity to correct them and to make the market better, faster, stronger. And I'll end with this on that comment, or on that topic, is that, you know, some of our clients today, where there were bad actors that were in there overselling equipment, overselling the loan and the product, there is definitely an initiative by our clients to right those wrongs.
I guess I see that there potentially are bad actors. There's news stories about bad actors going on, people selling the product. You talked initially in my first question about education, right? And I said, look, in their opening comment, it felt like I was buying a timeshare where I got overwhelmed by very aggressive sales techniques. Now I'm in the industry. I quickly went to a number of state websites, opened up the state website, and basically it contradicted pretty much everything that my Instagram feed tells me that I'm going to get for free, right? So what I kind of wonder is, how do I get smart on these things, and what's the best education? So you made a strong argument that the consumer owns this. You're taking debt. Jeff talked about this being significant investment in your future. You're going to make a long term. I think you said you're amortizing this over 20 plus years. So that's a pretty long commitment. How does the consumer get smart?
Yeah, I do think that there is an obligation from local, state, federal agencies to put as much information out there as available to educate the consumer. Um, Part of my previous life, you know, I worked in sustainability, and I worked for a nonprofit that was an energy efficiency implementer and loan originator. And you would be surprised how many folks don't really understand what these rebate programs are, or what the utility is providing that is subsidized by the state or subsidized by the ratepayer funds that they've been paying. Unfortunately, most people don't even understand that there is a portion of their utility bill that goes to a ratepayer fund to actually help buy down the costs of energy efficiency, clean energy generation, solar, and so forth. So there is a lagging play in this from the consumer in really understanding a lot of these things. And on one hand, maybe this is contradictive of myself, I think the government needs to play a better role in educating people to understand what these programs mean and what these opportunities are. Um, but I also think that they need to regulate the market, smartly regulate the market. I don't like over-regulation. I don't like under-regulation, but regulate it correctly or adequately, and so that there is some more consumer protection. You know, APR disclosure, right? When we talk about transparency, there's an opportunity there. Sharing and understanding what your local utility company is providing with that interconnection agreement. Like you, Chris, you know, I'm currently building a new home. We're putting solar on it, and not storage at the time, but it just doesn't pencil out for us. But we are doing solar, and so I did the same thing. I actually called around. You know, I live near Madison, Wisconsin. I got some of the, you know, local brands and folks, and even some referral folks. I'm a bit more at an advantage because I'm in the energy financing space too. So I called around. What a vast difference between what people want to sell you and tell you, right? So I think there needs to be some oversight from a government perspective as to how these things are sold to you and what is being shared with you from that transparency perspective.
In your answer, you said something interesting, and in our pre-call, we talked about this. You said, "Look, we don't have battery. You didn't ask for that there because you're qualifying your system out." Help understand how having the right size system for your home applies to the financing.
Yeah, and I will probably beat on this until I'm no longer in this industry or taking nourishment. You have to have the right size equipment, and you have to vet contractors to make for sure that you have a trusted contractor that's giving you the right answer. There's so many different apps and opportunities out there today for these contractors through satellite imaging or other imaging to really hone in on the size of your roof, the placement of the solar compared to the trees, compared to all other aspects that affect production. So from right sizing the equipment, we have to consider those energy efficiency measures, right? Make for sure that the building envelope is appropriately, air duct, ceiling, HVAC, all those other types of things, windows and so forth. And then you get the right modeling that comes into play, and you right size the equipment. There's a lot of app opportunities out there, Aurora, Blue Banyan, yada, yada, they go on in terms of measuring, monitoring, putting in the parameters of your usage, your consumption, how many people live there, and you can right size that equipment.
In terms of customers shopping around, I also want to give a plug for Energy Sage, which allows you to go through that process. They've got a lot of great educational materials, get multiple quotes from different qualified vendors, see reviews. So there are increasing tools out there. And on the energy efficiency side, Rewiring America has some tools to understand what options are out there and what rebates individuals may qualify for. So it's great to see there's more going on in terms of customer education to navigate through this process, since it is pretty new.
But you guys have both said two things differently in your subtlety. Jeff just talked about rebates, and you talked about incentives. So as a consumer, what I want is put as least money down as possible and have the cash flow work, I suppose, depending on what your finances are like, if it's cash flow or if it's capital. Maybe explain how that impacts.
Yeah. So from the energy efficiency side, there are a lot of, utility ratepayer funds out there that come in the form of a rebate. They'll come in the form of a check. Tax credits are tax credits, right? So the consumer really needs to understand that. So from a PV perspective, you're just getting a credit on your income tax based on eligibility. And so that comes in the form of many months later as a tax credit. It does come, hopefully in the form of a check, but nonetheless, it's not an upfront contribution. It's a late stage contribution, which creates an opportunity again for the consumer to be wise and disciplined.
Now, we talked about interest rates, but there's additional pressure on some of the largest markets in solar in California with evolving NEM regulation. So it's not just interest rates. There's other storm clouds on the horizon in terms of, are these systems going to be given the legacy program treatment, or are they going to get the new one? There's some uncertainty there. But the question being, do you foresee a wave of defaults on a large amount of the existing or near-term solar finance systems that are out there in securitizations?
No, not necessarily. And I think the right measures and the right approach equal, all of these things that we talked about really can equal a cash flow opportunity to where it just doesn't make sense that you would have high delinquency or high default. You have to consider that the borrower is a homeowner. The homeowner has a mortgage. They qualified for the mortgage because they have a good FICO and they have a good DTI. And they're also now compensating production with what they would have used or, spent through the utility company. I think we've touched on this in the past, in that, it doesn't do anybody any good that's already committed to the loan obligation to not pay that back, have the system shut down, therefore having the production shut off and having two obligations. You're then going to have a utility bill and you're still going to have that debt obligation.
So to restate here, if the system is sized right, solar and energy efficiency are credit enhancing. It's not that car that's just an obligation. It's actually something that saves the customer money. If it's sized right, if it's financed correctly, there's a strong incentive for homeowner or any counterparty to pay that back, because if they stop paying it, their costs go up with the conventional grid supply. And as Chris, as you mentioned before, those rates, especially in some of the largest markets like California, continue to go up and up and up. So this continues to be a sound investment. So what are you worried about? When you think about the future, are there legitimate concerns You've talked about need for changing behavior. Should we be worried about the future of the residential solar industry?
No, but like any industry, there's always opportunity for failure. And I do think that, as we talk about government enhancements, incentives, and so forth, and involvement, good intentions sometimes have bad outcomes. I think the tax credit is a great incentive to continue to push and drive the market because it mathematically makes it make more sense for more folks. But at the end of the day, if that tax credit is built into your financing model to the consumer for this thing to have the appropriate cash flow, I keep saying that, but it's important, then the consumer really has to be disciplined and really has to account for, I'm going to get that tax rebate check back or credit. It's a credit, you've overpaid. And you've got this, incentive built into that. That has to go towards that principle. If in 6, 12, 18, 24 months from now, because these things are deferred, right? People say, my gosh, I have to pay the credit card bill. It mounted over the last 2 years, and do not pay down that principal. That loan will re-am dating back to the first date of a much higher dollar amount. Now you're upside down on that cash flow potentially. So there is concern from my perspective, from our perspective, from a loan servicing side of things, that we have to continue to make for sure that we are informing the consumer, again, to that consumer education. And we do that in notifications in conjunction with our clients to say, hey, it's been 6 months. You're doing great on your loan. Got your tax credit coming. Please remind yourself to put that towards your principal so that this thing is what it was originally set up to be.
I want to emphasize this point, Tom, because it's really important and it's a little subtle. So let's say that there's a $30,000 total cost install system. There's a tax credit of 30%, so 10K, and that comes back to the customer in 6 to 12 months, let's say. And what you're saying is that the cost-effective financing, the benefit for the customer, assumes that $10,000 goes back to pay down the loan principal, and you're raising a flag and saying, hey, if the consumer gets a $10,000 check and all of a sudden thinks of 6 other things they'd rather use that money for than the responsible thing of paying down the loan, then that's going to result in a less cost-effective system, especially if there's a decent interest on that loan. And that's an easy decision to make in the moment, but actually undermines the cost-effectiveness of solar in the long term, even for a well-designed system. Is that the takeaway?
Well, it is. And so there's definitely a concern, something that we need to measure and monitor as, these things start to hit those 12, 18-month promotional periods, and really kind of take a look at what is the payback on that, on that tax credit down, paying down the principal. And, then that's something that the installers need to consider in terms of future planning for promotional periods. So yeah, it's definitely something we need to monitor, pay attention to. I do think, though, and we've seen this, with the exception of the COVID era where supply chain, and we all know what that was about, but the cost of this equipment continues to go down for the most part, right? It's considerably cheaper today than it was 5 years ago, 10 years ago. So I think as those costs of utilities and inflation increase, but the cost of the equipment, right sizing the equipment, comes down, I think you can eventually wean yourself off from the tax credit and the thing would still make sense.
When autos have spare inventory on the lot, I get 0% interest or 2% interest or some sort of deal to move the inventory. Are we seeing that kind of changes in the finance for solar rooftops, since you said there's an inventory kind of buildup and that's what's driving share prices down for some of these public companies?
Yeah, but the problem there, though, Chris, is that they're getting a warehouse line of credit to reissue that debt to somebody, and that cost is not 0%. So if they were to absorb that cost, they'd have to pass it back on to the consumer in the cost of the installation. And now you're teetering on that, is the math right? Is what the consumer needs out of this deal financially the right fit? And when we saw warehouse lines at 3% and mortgages at 2.8, 3.1, 3.2, over the last several years, I know it's not free, but a lot of folks said, look, cash was free for about 20 years, right? When it's at those rates, there is a little bit more flexibility from that installer to be able to create some incentive financing. Today, not the case.
Now, we're talking about financing is basically an unsecured loan. Will I get a better deal if I do a second mortgage or do a line of credit on my home? Is that a better option for people?
Not necessarily, because today HELOC rates are 8.5 to 9.5%. So, and today's, some of our clients are offering 4.9 to 9.9% on their solar loans. So, no, not necessarily.
Awesome. One of the things we like to do on the podcast is ask our guests about crystal ball. So we've been focused more, I suppose, on the negative. I think your opening, you were actually pretty bullish on solar, and you were just talking about where we are in the state of the moment, if I understood you correctly. So if you had your crystal ball out, where is the home solar industry 12 months from today?
Probably at a marginal growth. So I say, if you say that I'm bullish, it's just because I'm confident that it works. I've kind of hit on that, Jeff, and you and I've had this conversation. Solar works, right? And when it's done correctly, all those things intersect that I talked about. It works, and interest rates will settle out, probably slightly decrease over the course of 24. And then it becomes a new market familiarity, right? You're familiar with 5.9, 6.9, 9.9, those rates. When you're familiar with and used to for the last 20 years of everything's 2.9, or you go to Home Depot and it's 0% for 12 months, those kind of things are, going to be maybe not the new norm, right? So when people get familiar with, comfortable with, and pencil out the new norm, and if it's stable, I think it'll be all right. And I do see, that steadiness occurring today. And I think we'll, at the end of 2024, see a slight growth in the industry.
Awesome. Well, I want to thank you so much for being on the podcast today. It's been a pleasure, Tom, to have you on.
Yeah.